Greetings, members one and all of the Salivation Nation. The physical silver squeeze continues. Let's explore. We all remember just recently the silver short squeeze that occurred in the paper markets, the ETFs, and it was relatively short-lived in that arena. And the aftermath of what happened with GameStop, AMC, there were a lot of different theories as to what was going on and why it was occurring in the silver market as either some sort of a delusion or trap. But nonetheless, what occurred from that, as a result, is an increase in demand in the physical markets as well for silver. And that has certainly excited the community for sure, even after prices had pulled back. We're going to take a look at an article here from Kitco that talks about this and wonders if there is enough silver in supply. So we'll talk about that here. The mainstream media got the silver story wrong, according to Guardian Vault's business development manager, John Feeney, who said the real story is the physical squeeze, and he's saying that it's far from over. A lot of mainstream media picked up the silver story, calling it a short squeeze, which was misguided. And there was an attempt on it, we remember, and the prices did pull up. In fact, they got just right above $30 an ounce briefly before pulling back. But the real story that is happening is this physical squeeze that we're continuing to see in the market, where it's really difficult to get stock, Feeney told Kitco News. Even after silver prices pulled back from 8-year highs last week, strong demand in the physical market remained into this week. We continue to see robust demand for silver even after this pullback. We sold out of our holdings last week pretty quickly, he says, and we're trying to restock. Even Australia's Perth Mint had to stop taking orders on silver cast bars temporarily last week. We continue to see the physical squeeze in silver happening. Usually when the market sees a significant increase in demand for physical metal, bullion dealers run out pretty quickly. And we did see that last year as well. And we're seeing that this year too. But there were times, we remember that last Sunday, 2 weeks ago, bullion dealers pretty much stopped taking orders, even though they had stock. They weren't sure what was going to happen with this paper squeeze when the markets opened up on Sunday night. And of course, when that did occur, well, the prices kind of went up, but not by as much as I think many had feared. That their positions, they could reconstitute their selling again. But quickly after that, we started to see many different products did sell out. And that's what happens. The longer the demand is, the longer the delays, and refineries will be behind. That does not necessarily mean that silver supply is gone or running short. It's a matter of just getting that supply into the hands of refineries and into mints to be able to produce bars and rounds and coins. You often see refineries limit their production to one standardized size and stop producing 10-ounce bars or 100-ounce bars and focus on kilo bars. And we've also seen that many places are short on stock on fractional or certain types of silver and are focusing on the silver they can get quickly to pass on to you. Does this mean, does this new demand translate to higher prices, and how soon? Well, we know it is translating to higher premiums, and that certainly has made a lot of people, including me, nervous about buying in this market. Feeney noted that it is a long-term bull play with a time period of about 12 to 24 months. He also added that silver could see the same bull rally as palladium. Now that is interesting indeed. You almost would need a perfect storm for that to happen, I would think, though. But let's see what he says. He says, if you think of silver like palladium, silver is an industrial metal that gets used up in solar panels, EVs, electric vehicles, and so forth. So moving forward, if we continue to see a really strong increase in investment demand combined with the strong fundamentals and industrial demand, quite quickly, you could see the physical market dry up. And then we're talking about a movement of prices and parabolic levels, kind of like what we saw with palladium. But silver is a lot more common than palladium. It's going to take a lot for that to occur, in my view. That's quite a ways away, in my opinion, before we see anything like that occur. Often this becomes a self-sustaining cycle where news around physical shortages in any commodity tends to attract speculators. It's similar to what happened in palladium. There was a strong industrial demand in palladium. Prices started to move into a bull market. You heard stories circulating around physical supply drying up. And then what happened was large speculators started entering the palladium market. Then the bull market really took off. This is what Feeney is continuing to say. He says, I look at silver and I see something like that potentially happening over the next 12 to 24 months as the industrial demand continues to be robust as well. And that's just it. He's looking at a 2-year window for this to occur, but it would have to be extremely strong, sustained demand in both arenas, a two-pronged approach. And even at such, there's so much silver out there. The problem would be in refining and producing silver for those industrial uses, as well as meeting the investment demand or demand for the head for the physical. And such as you see here, we've got a couple different products. We've got a silver round, 2 silver coins, and a couple little small 10th ounce guineas here that I actually had won in a contest from Aloha Stacker. And I will post a link to Aloha's channel below. He's got a great channel. Definitely check him out. But these are little 10th ounce silver pieces that I had won from his channel. Very, very nice indeed. But, pieces like this and that are smaller fractional, you're not going to see as much of this stuff as we head into a strong demand and sustained demand cycle. And so that is something that we must keep in mind and consideration moving forward, so that some of these smaller pieces here that you see you never know, they may command a premium for collectors down the road, but that is certainly not of interest or any consideration for stackers out there, but maybe for collectors it's something to consider there. And so what does this mean for silver's price? Well, the silver market has been largely under-owned and under-invested until 2020, when silver began its bull rally and outperformed gold. In terms of the actual price, it dipped down unusually when there was a big sell-off to under $12 an ounce, and it more than doubled during that period. But that was just in the paper price. The premiums and what you can buy and sell it for are much higher, and were much higher then. We've never completely rebounded from that time period, largely because of COVID, but other factors too. Silver had relatively poor performance over the last few years prior to 2020. There wasn't too much investment in the silver mining sector over that period. Prices were quite depressed. I remember it well. The move that we saw in 2020 was just the beginning of a bull market, according to Feeney. Feeney said that the metal could rise into the 30s range between now and the end of the year in terms of price projections, and I actually agree with that and made that same call. He also highlighted that once silver breaks above $30 an ounce, new investors will come in and begin to chase that price higher. And I could see that happening. That's the psychology of the markets. People tend to, buy high and sell low, it seems like, which is opposite of what you should be doing. Feeney said that the metal, again, will rise, but we will get to see silver go through a mainstream bull market where everyone is involved. And we're already kind of starting to see that to a point with many of these bullion dealers talking about new customers. We've heard on Bloomberg the interviews with APMEX and SD Bullion talking about a treasure trove of new customers that they're acquiring. It is still a small percentage of the general population that are investing in silver now, which leads me to believe that investment demand could double from here. What happens, though, is price often drives demand. If you do see the price break out above $30 pretty quickly, you will get a lot of investors that come in the market to chase that price. And then we could see, well, potentially $50 targets. But we'll see. We've been there before. I could see that pathway happening, but I'm very cautious in making that call or following that logic, considering what we've seen in the past with silver. He says, just given the amount of money printing combined with how underowned silver has been in the last 7 years, plus industrial demand combined with increased investor demand, we could see that $50 mark. But again, I think it would need to be sustained in both areas. And I don't think we're quite there yet to where we can make that prediction. A lot has to happen with vaccines, and all the stars need to align in that regards to be able to get us to that point. It needs a stronger economy and strong, sustained demand. Will that do it? Will people get tired of silver and bow out, especially when they see the premiums after they go to sell, and some places may only give them marginal dollars above spot price at the price they bought it for, and they realize that spread is just too much for them to continue, and they bow out and they realize, you know what, I got screwed on silver because they didn't understand it fully. That's the fear that I have, and I've seen that happen before. If you're just getting into the market now, the first thing to look at is the gold to silver ratio, and I've talked about that before too. In the cycle that we are currently in, which is a bull market in precious metals, silver tends to outperform gold. During the cycle, it makes sense for the ratio to go back down below 50 and potentially in the 40 range. When you factor that in, when you take a good look where you envision silver to be. The time of writing, the gold to silver ratio is at 67.5. March COMEX silver was trading at $27.35 an ounce. So we'll see what happens. I mean, there's a lot of different factors here that come into play, and obviously there's some bullish activity that we've seen in the market for silver, and I think that is something that is encouraging, but we shouldn't necessarily bank that that's going to be the case going forward here. Because if there's other factors that could come into play, unforeseen situations, hiccups in vaccine distribution, we're already starting to see some of that, and other factors that could delay economic recovery, which means less demand for industrialized silver. But also there's also some bullish aspects for silver in terms of government intervention, in terms of mandating and providing EVs, solar panels, and the like, based off of a policy decision. So we'll see. There's all these drivers that are out there that we're looking into, and one of that is this global move into renewable energy for sure. And so that is something to take into account, and I think that's why overall I am bullish for silver, and I think it's wise to hold some and maybe even consider purchasing some within your budget. But keep in mind, with these premiums that we're paying now, if you go to sell it, what you are facing if you need to sell it, especially if you need to sell it quickly. So understand the price of silver and what's involved there. So there you have it. Fascinating indeed. Let me know your thoughts in the comment section below about silver's continued squeeze in the physical realm. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, hit that notification bell for future videos, and subscribe.